Hello and welcome to my channel. My name is Lisa Seymour Howard and I am an independent broker in the life insurance industry. And I was asked the question, what is an IUL? An IUL is, IUL stands for Index Universal Life. It is a life insurance product that you can earn cash value from. It mirrors the market. It's not in the market, but it mirrors the market in growth, and it has a zero floor. So what that means, you can never lose any of the money that you have placed into your IUL, because when the market goes below zero, it stays at zero. If the market goes above, it may have a ceiling. That ceiling is the most that you can earn on that IUL. So if the market is at 20% and you have a 12% ceiling, that period you'll only earn 12% of that market. So it has a floor, which is good because you can't lose any money in it, but it also has a ceiling. Now, when I say you can't lose any money, it is a long-term play. So if you have an IUL and you cancel it too soon, then you will not gain everything that you put into it, because there is also a cost of insurance. The cost of the insurance is because there is a death benefit attached to it, because there is a life insurance policy. That is a life insurance policy. So that's why I say it's a long-term play. So you leave it into play for at least 10 years. Otherwise, if you cancel it early, you will have a surrender charge. So in a nutshell, IUL, Index Universal Life, it mimics indexes like the S&P 500. And once you put your money in, you won't have to be concerned about the market going losing, because you won't lose. You'll stay at zero in the years that the market loses, but you have a ceiling as well. So you can never earn more than that ceiling, but you won't lose anything. So the difference between that and stock market, you're more at risk for losing, but you also have the potential for gaining more than whatever that ceiling is in the IUL. So it's a different product for different people. Depends on what you want and what your needs are. The good thing about an IUL is that you can borrow against the cash value of your IUL. So what that means is, if you have $20,000 of cash value, you can make a loan for the $20,000 of the cash value. Depends on what you put into it. And let's say you have a $20,000 of cash value, you can borrow those $20,000 instead of having to go into a bank and borrow it. So you're borrowing it from yourself, but that $20,000 is not coming out of your money. It's coming from the insurance company, because the insurance company has a death benefit. Then you are borrowing against that, so it lowers your death benefit. And the reason is the insurance company knows that in the end they'll take that money out the death benefit once whenever you pass away. So you have the option of paying it back or not. And that's in a nutshell what an IUL is. If you need more information on what an IUL is, or if you're an insurance agent or an insurance broker, follow me for more information and more tips. If you're looking for a agency that's going to help you, that's going to give you information that you need to be able to sell the products that you have, or just educate you on what you are selling, then leave me a note in the comments, and I'll get back to you, because I am on a winning team. I know more about finances than I've ever known before. So that is what an IUL is. And like I said, like, subscribe, and follow me for more tips for insurance.